Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Friday, April 1st, where I'll briefly go over what happened in the markets today and then see how things are looking for Monday, April 4th. And it was an up day on a closing basis, but we're starting to see some weakness in a few of our indicators. And again, if you want a more in-depth explanation of what I go through, please go over and tune into the full length edition of the daily video update. So what happened on Friday? We had a slightly higher open, which was not all that hard to do after the big down bar. If you saw from Thursday, saw a lot of selling on Thursday going into the close. Well, there was immediate selling after we opened on Friday, and it took prices negative. So that kind of took care of the bounce back, at least earlier in the morning. There was a bounce that they tried, and that didn't really lead to anything. And then prices ended up falling down to S1. As the day went on, we saw a rebound from S1 and prices actually went back positive. But then there was some late day weakness that came into the market. And what kind of saved the day from being negative is right at the close, there was some strong buying that came in, and that gave us a 0.34% gain with the S&P on Friday. The volume was below average and continues to decline. So that's kind of a concern as we go back and forth. You have a lot of indecisiveness right now. People want to go long. Do they want to go short? Well, they're not really sure what to do, so they do nothing. Our technicals are still positive, but are showing some signs of weakness. They're still strong, but what we need is Monday or Tuesday of this coming week, we need to see some buying to come into the market if we're going to maintain that positive environment. We still have earnings reports that are coming out, and we're getting near the end of earnings season. And once I get all my information, I'm going to do my own valuation based on earnings. Of course, everybody is dealing with inflation and interest rates right now, a lot of geopolitical concerns, Russia, Ukraine, that whole situation, what's happening in China. They still have a lot of lockdowns there. How's that going to impact the US economy? The thing that a lot of people are talking about are these different inverted yield curves. And I have a chart that I'll briefly show you here, but I go into more depth in the daily video. And even earlier in the week, I posted a video about the yield curve that you may find useful. And then there's the debate going back and forth about the oil supplies. Apparently, they're going to release some of the oil reserves, which may help bring down gas prices a little bit. That might help things, make people feel better a little bit. But then you have the other side going, wait a minute, those oil supplies are for emergency use only. If we're in the middle of a war, and similar to Pearl Harbor, where they almost took out all of our fuel when they attacked Pearl Harbor, we don't want anything like that to happen. So we shouldn't just use this like an ATM machine. We don't just walk up and take out our oil reserves just to try to help people feel better. We need that for emergency purposes only. Then the other side comes back and says, yeah, but we're paying through the nose at the pump. And even if this helps to decrease the prices a little bit, it's worth doing that. So that's kind of the back and forth that's going on right now. Some comments that we can make: the technicals are positive, but weakening. And again, if you want to see all the charts that I go through, please look at the daily video update, the full length version. Then all the different geopolitical concerns that I just talked about. We did have the big employment report that came out on Friday, and this is supporting future rate hikes. It was a little weaker than expected, but we're still seeing growth in the job market overall. And this is what the Fed will use to justify raising interest rates. Well, at the same time, we're seeing some problems in the economy. And that's why we're seeing this real yield curve thing going back and forth. And while a lot of people are saying, no, we're headed towards a recession, other people, no, the economy's growing. And again, that's part of the battle that goes on all the time. Our current market valuation, I've changed this to over our fair. Okay, let me back that up and say it again. The current market valuation, I've changed that back to being fairly valued. I know that a lot of times I say overvalued, and I will put that back up, but it's after I do my analysis using the charts and preparing a video that I have. This is going off currentmarketvaluation.com and how they look at things. Our trend is positive, but could be weakening. And I will have the ADX chart. Our bias, even though we had an up day, it's still looking a little more negative than positive. If we didn't have that late day buying coming into the market on Friday, we would have been down, or at least not up very much. But our momentum is, I've switched that over to mixed, because we're not seeing this healthy advance anymore. It looks like we've stalled out currently. Okay, here's the daily chart where we did have an up day, so there's a green bar, but we saw a real decline on Thursday, and we still have overhead resistance with where we're at right now, and we still have some support that actually helped us a little bit on Friday. And then you can see here where we really spiked up a bit with volume on Thursday. That was the last day of the month and the quarter. Well, volume really trailed off on Friday. And here's the ADX where it's showing that the line is going down. These two lines are coming back closer to each other. And if we still see more sideways action or even slightly declining action because the green line's on top, that's probably going to push this down. So this sideways scenario becomes a little bit more likely unless we can see some buying coming in to push prices higher and have this ADX turn back up. Then I wanted to include this because after getting above its 100-day moving average, the S&P fell back below it, and we're right about at the 100-day moving average right now. Here's our moving average rainbow. We're falling back into the top parts of the rainbow currently. But long term, we're still positive. The moving average is at 44.85, and we are at 45.45 right now. So we're still above the long-term moving average. So that helps with the long-term trend. Then the Dow, which had gotten back above its 200-day moving average, and it looked like about at this point, a lot of people were willing to accept that this move up was real. Well, that's just about the time we stalled out, and now we're back below the 200-day moving average. And then this is the yield chart that I'm talking about. You may want to pause this and look this over. This goes back as far as I could go with these charts. On top is the S&P, and then these are the different yield curves. And you can see where some of them are inverted, but some of them are still advancing. And that's part of the debate that we're seeing going on back and forth. And again, if you want more of an in-depth discussion about that, please check out the yield curve video that I posted. So what's our outlook for Monday? Short-term overbought readings, are they wearing off? Well, or are we seeing the technicals weakening right now? Okay, we're kind of not real sure at this point. The market is still in an intermediate term range. We're still battling between growth and value. There's a lot of yield curve concerns right now and a lot of debate going back and forth. Which one's the best? Which one's this? Which one's that? I addressed that in other videos. And then the oil supply that I kind of went into, both sides of the different debate that's happening right now. On Monday, we have factory orders coming out, and then all of the different geopolitical events, which of course, the Russia-Ukraine is in the lead, and that could change at any time and get either better or worse at any point along the way. Then our different scenarios, if we're looking to go down from here, this is the scenario that I'm looking at. Are we in a short-term overbought / resistance area? That's kind of what I've been going with, and that seems to be still what's on the table right now. But are the recent declines a reversal? It's looking a little weaker than we would like it to be. So we have to at least allow for a reversal to be a possibility, or just to wear off short-term overbought conditions. That still seems to be the likely scenario, but if we see follow-through weakness on Monday, we're probably going to have to at least give this first scenario a little more clout. We want to keep an eye on rising interest rates. They really spiked up on Friday, and then these yield curve concerns and the debates going back and forth. There's still this idea that bounce that we came up out of, it can't go any higher, it can't go any higher. Well, just about the time people start to believe that, that's about the time when it's stalled out. So that could be working as a negative right now, where down below, people see a little bit of weakness and they go, nah, yeah, we're getting ready to head lower. It's not going to go any higher from here. Well, that's disbelief, and that could actually work more in favor of the positive scenario. And then will sentiment turn more negative? We're very neutral right now. We're right in the middle as far as the fear and greed index is telling us. Okay, let's look at the up scenario. We have built strength after building a base. Yeah, the oscillators are positive, but they're starting to show some weakness. The moving averages, those that are below current prices might be providing support. Those that are above might be providing resistance. And then I addressed the belief versus disbelief. Now, this third scenario is looking a little more likely right now, where we see price movements slow down. We don't see the real wild swings. We chop more sideways and we get more into a trendless environment. If the ADX drops below 20, that looks more likely. So our conclusion, the S&P is positive and it could be breaking out of a range. Then looking at the short term, just days to weeks, it's looking positive, but we're seeing some weakening signs. Intermediate term, it's also positive, but some of our oscillators are starting to show some weakness, even though they're still positive, and the moving averages might be providing either support or resistance. And then long term, we are still above the 200-day moving average, so we are positive that way. And I have to cough. I'm sorry about that. I can't edit this out currently. Okay, so look for some of these other videos that I'm also posting. I do have the daily video that you can look at, the full length version of what I just talked about now. Then I'll be, over the weekend, I'll put out a weekly video, and my intentions are to do some monthly videos, just going over the markets. I've done one of those before. And then these will be newer videos to you that I've done in the past, where I go through and look at the economy. I go through the different sectors that make up the S&P, and then I just look through international indexes just to see how is the US looking, how are things in Europe and Asia, how's all that stuff going along. So thank you. Again, tune in to the full length video if that will be of use to you. Have a great weekend, and I'll talk to you again after Monday's market.